Welcome. In this video, is XPR coin trend broken? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. When we examine the chart from a broader perspective, it's important to once again highlight the descending trend line that we discussed in detail in previous analysis videos, and that has exerted significant pressure on the price for a long time. This trend line has recently stood out as one of the key resistance areas guiding price movements. At each touchpoint, selling pressure intensified, and the price reacted downward, making this descending trend line a psychological resistance wall in the minds of many investors. However, with the most recent price action, it appears that this strong resistance zone has been broken. In the past, each time the price approached this trend line, it faced strong resistance and was typically rejected, pushing back down. But this time, the determination of the buyers was clearly felt, and the price broke above this trend line with significant volume, beginning to build a new technical structure. Such breakouts, especially when the trend has been tested multiple times, are considered highly valuable because they indicate a shift in market psychology and suggest that buyers are taking control. However, a key point that must not be forgotten is that the price action following a breakout is crucial in determining the breakout's validity. In technical analysis, this is referred to as a retest. During this process, the price often pulls back toward the trend line it previously broke, essentially undergoing a test. This is exactly what is happening right now. The price has returned to the broken descending trend line, essentially undergoing a trial. This testing phase is critical because whether or not the trend line has truly been broken will be revealed by the reaction at this level. At this stage, investors should be mindful of two scenarios. The first scenario is that the price finds strong support at the trend line after the pullback. Buyers step in before the price dips below it, and a new upward impulse wave begins. In this case, the breakout is confirmed, and there is potential for a new upward leg to form. The second scenario is that the trend line fails to hold as support, and the price falls back below it. In this case, the breakout could be a false breakout. Such a scenario may put the price under renewed downward pressure. Additionally, these types of retest movements are also significant from a psychological perspective. Many investors prefer to wait for the pullback after a breakout rather than entering a position immediately. Taking a position at such levels is often more favorable in terms of risk-to-reward ratio. If the price forms a bottom here and turns upward, it allows for tighter stop losses and a more secure entry point. At this point, trading volume must also be observed. If the price retests the trend line with low volume and volume significantly increases when the price starts to rise again, this acts as another technical signal indicating a successful retest and renewed strength from the buyers. Conversely, if both volume and momentum are weak during the retest, the risk of the price failing to hold the level and continuing to decline increases. In conclusion, the descending trend line, which has faced repeated selling pressure and been seen by investors as a psychological barrier, has now been broken to the upside with strong movement. Attention is now on the ongoing retest process following this breakout. If the price can hold at this key technical level and initiate a new upward move from here, this could mark not just a short-term rally, but potentially the beginning of a medium to long-term uptrend. Therefore, the price's pullback to this trend line and its subsequent reaction will be one of the most critical factors in determining the direction of the price structure in the days ahead. But looking only at trend lines is not enough. We also need to consider other metrics. Keep watching. When we evaluate the chart within the framework of Elliott wave theory, we observe that the current price structure corresponds quite characteristically to a third wave formation. In Elliott wave theory, the third wave is generally considered the phase that includes the strongest and most aggressive upward or downward movements in the market. This wave is the stage where investors are most excited, the majority of market participants enter positions, and the highest momentum is typically observed. Therefore, seeing the price currently moving within this wave may signal significant pricing potential in the coming period. In identifying the third wave, both the structure of the price movements and the signals from technical indicators are crucial. When examining the current price action, it's clear that the first and second waves have completed and undergone a correction. The upward movement that followed has accelerated and climbed at an increasingly steep angle, which is a sign of transition into the third wave. According to Elliott theory, the third wave can never be the shortest wave and is most often the longest and strongest. For this reason, minimum target levels at this stage are typically measured using Fibonacci extension levels. It should first be noted that the 1,618 Fibonacci level is technically considered the minimum target for the third wave. This level is generally regarded as the starting point of the main trend movement in the market. The price usually doesn't just reach this level, but often extends to 272 due to the strength of the momentum. Looking at the current price action, we can see that the upward move is continuing with strong momentum. This suggests not only that the third wave has started, but also that it has the potential to extend. If market conditions remain favorable, positive news flow continues, and investor interest increases, then not only the classic target levels like 1,618 or 2,272, but also more advanced Fibonacci extension levels such as 2,618 or even 3,618 could be reached. Especially in highly volatile markets like cryptocurrencies, the third wave can extend further and climb higher than expected, surprising many investors. However, there is another very important factor to consider here: the substructures within the third wave. In Elliott theory, each wave is subdivided into 5 smaller waves. In this context, we may have already completed the first, second, and third microwaves within the third main wave, and might currently be heading into the fourth microcorrection. If this intermediate correction completes and the fifth microwave begins, it could trigger the final aggressive move of the third main wave to the upside. This could even carry us beyond the projected target zones. Of course, another point investors should be cautious about is to avoid making emotional decisions and instead act based on technical analysis data. Because the third wave often appears very attractive, many traders may enter positions at the wrong time, assuming the move will last forever. Therefore, having clear trading strategies and predefined target and stop-loss levels is essential. In conclusion, the price action we are currently observing aligns with the third wave in Elliott wave theory from a technical standpoint. And this wave is the phase where momentum, investor interest, and market enthusiasm are at their peak, allowing the price to move forward with little to no resistance. Fibonacci-based minimum targets such as the 1,618 and 2,272 levels should be on our radar in the coming period. However, if momentum continues, volume increases, and investor confidence remains strong, these levels may only be intermediate targets. The price may have the potential to test even higher levels depending on market dynamics. Patience and caution are advised. When we take a closer look at the chart, we can clearly see a distinct downward trend line on the RSI indicator. This trend line, drawn by connecting the RSI peak levels, reflects a weakening buying pressure and indicates that investor sentiment is responding with increasingly lower highs. This descending structure also serves as a technical signal that the market is losing strength in the short term, and each recovery attempt in price is weaker than the last. Currently, the RSI has dropped to a very low level, around 23. This level is considered to be in the oversold zone in classical technical analysis. In other words, it suggests that the market is exhausted, selling pressure may begin to fade, and a potential recovery in price could be on the horizon. However, simply being in the oversold zone is not by itself a reliable signal for a rebound. The key factor is whether the RSI can break its downward trend line from this point. The downward trend line on the RSI acts as a resistance in technical terms. If the RSI breaks above this line with strong volume, it is generally seen as a strong leading signal that a similar breakout may soon occur in price as well. This is because RSI is a momentum indicator that reflects the speed and direction of price movements. Therefore, a breakout of the RSI's downward trend suggests that market dynamics are beginning to shift. Selling pressure is weakening, and buyers are starting to step back in. It's important to remember that trendline breakouts on the RSI often signal a change in price direction before the price itself begins to move. That means if the RSI breaks upward, even if the price remains flat at the moment, there's a high likelihood that the price will soon follow. That's why closely monitoring this structure in the RSI is essential for traders using technical analysis. Additionally, RSI being at such low levels could indicate that a bottoming process is underway. As the price and RSI fall together, the decline may be slowing and entering a phase of base building. Another important detail to keep in mind is that if the RSI breaks its descending trend line but remains below the 50 level, the breakout is not fully confirmed. The more reliable signal comes when the RSI not only breaks the trend line to the upside, but also moves above the 50 level afterward. When these two conditions are met, we have stronger evidence that the market has shifted direction. Based on the current structure, the RSI is now very close to its descending trend line. This means that a breakout or a downward retest could occur soon. If this resistance is broken, market sentiment could quickly shift to a more bullish tone, potentially triggering a new wave of buying among investors. However, if the RSI gets rejected again at the trend line, it would suggest that short-term pressure is likely to persist and that price may continue to move sideways or downward. Yes, friends? I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.